Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering the tax changes in the governor's revised budget proposal. We cover the budget revision in the June 2026 issue of Spiedel's California Tax Letter, including information on a proposed extension to the managed care organization tax. This monthly newsletter will ensure both you and your clients are up to date with California tax law changes, and you can get subscription details and download a sample issue at spiedel.com under Publications. In his revised budget proposal released on May 14, 2026, the governor included several new tax proposals. These proposals are some of the key revenue-raising provisions that the governor will use in his budget negotiations with the legislature. Under California's Constitution, a balanced budget has to be passed by the legislature by June 15, 2026. However, we frequently see budget trailer bills that implement various tax provisions enacted later. This means that the ultimate tax provisions that will be passed by the legislature as part of the budget package may be enacted later this summer. Under the proposed budget, beginning with the 2027 tax year, all businesses would be subject to a business credit limitation equal to the greater of $5 million per company per year, or 50% of a company's tax liability. During the 2024 through 2026 years, California enacted a net operating loss suspension provision with exceptions for smaller taxpayers, as well as a $5 million business credit limitation. The governor's proposal contained in his 2026-2027 budget would make the revised business credit cap permanent. However, it would allow the net operating loss suspension provision to lapse, which means all taxpayers would be able to claim net operating losses again beginning with the 2027 tax year. Effective January 1, 2027, the governor's revised proposed budget would apply the sales tax to sales of digital pre-written software, regardless of how the product is delivered to the purchaser. That means sales tax would apply whether software is on a disk or physical medium, whether accessible by download, or by remote access through the internet, including software as a service, where the customer accesses the software hosted by the vendor but never takes possession of it. The governor's budget summary notes that of the 45 states with a statewide sales tax, 35 states tax digital pre-written software delivered electronically, and 24 states tax software as a service. The proposed budget would also reduce the $800 annual tax paid by limited liability companies, limited partnerships, and limited liability partnerships in their first year to $400 during the 2027, 2028, and 2029 tax years. The proposal does not address the $800 minimum franchise tax paid by corporations. The governor's proposed budget would conform California tax treatment of Trump accounts to the current federal treatment beginning with the 2026 tax year. This means that California law, like federal law, would not tax account earnings until distributed. It's unclear from the proposed budget summary whether the governor is also proposing to conform to the gross income exclusions for employer contributions or qualified general contributions made by charitable organizations or state, municipal, or tribal governments. If you need more information on Trump accounts, register for our live webinar on June 30th, How to Use Trump Accounts to Set Your Clients Up for Success. You can get details and sign up at spiedel.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's California Minute.